Very quickly, Nick, looking at market sentiment, where are we at the moment? Are we relatively low across the board? Is it a perfect time to start buying when sentiment is against you?
Yeah, if you're a bit of a contrarian investor, I think now's the time you're certainly looking at accumulating. Sentiment as negative it's been in years. Obviously, the European sentiment far worse than anywhere else, but that's for obvious reasons. American sentiment also quite low. VIX index back up at sort of mid-30s. You do get the impression that it's things are a little bit overdone when the sentiment is so negative. It's a time to sort of look at stepping back in. I saw net outflows out of mutual funds. I think the highest level on record, out 24 billion last week. So certainly sentiment back again. Euro beneath 122. Theme continues.
China coming to the table and saying that the sovereign risk crisis could impact negatively the global growth traction that we're seeing at the moment. Do we need to take that seriously?
Yeah, tell us something we don't know. I think we all know that. You come out and you see like Spain being degraded by the rating agencies. Well, surprise, surprise. I think a lot of that's backward looking. For me, I think there's a little bit of a silver lining with this sovereign debt crisis. Certainly with the euro being so weak, I think it does give a bit of a slightly bit more advantage to those exporters in Europe. So you might get a little bit of a silver lining out of it. But until we see that euro strengthen, back below 122 again, struggling to find some traction, it's such a risk trade. The minute that euro starts to strengthen, we get the sentiment back. But overall sentiment
that's the
very
question.
short.
Is the euro going to start to strengthen? Because we're looking at the moment at a trading range of 121 to 124 on the euro dollar. Doesn't look as though it's going to shoot the lights out.
It doesn't. But every time you pick up the papers and you see, the euro is the biggest short in history on the CME. You kind of want to cover your shorts and go the other way. It is that sort of trade at the moment. But for me, it's the first time in ages we're not trading these swings. We're sitting on our hands for the time being.
Talk to us about LIBOR, US dollar LIBOR, and what's happening on that.
Yeah,
front.
also yields going out again, a sign of risk aversion. The last thing the markets want to see is a credit freeze. That's what caused the whole problem in the first place. LIBOR going out to over sort of 50 bips again. You want to be a little bit careful. So there's a lot of indicators that we're watching at the moment, which is a direct correlation to how the institutions and how sentiment is. LIBOR squeezing out and sort of the yields pushing out certainly doesn't help things. It means the banks don't want to lend, and at the moment we need the banks to lend. So we're certainly in a bit of a precarious position at the moment, Bronwyn.
Are you starting to go long on a couple of stocks on the local market?
Are we picking up a few counters? BHP Billiton, under 200, a forward P of 6 and a bit. you can't go too wrong, we don't feel there. But we're certainly buying with caution. We've seen a significant, we've seen a 12-13% pullback from its highs. Some counters down 20 or 30%. You look at, I think Xstrata's down about 35% in London from its highs. So we're starting to see a little bit of value. The fundamentals do support it, but again, while sentiment is pretty shot, we trading cautiously.
Joining us now is Kaz Kavadia. He's the Managing Director of the Banking Association of South Africa. Kaz, thank you very much for your time.
Pleasure, thank
Kicking
you.
off with the meeting, obviously, that took place between Finance Minister Pravin Gordan yesterday and 7 banks, the purpose of which was really to have a look at the recommendations by the Banking Inquiry Panel, which was initiated by the Competition Commission. They put forward a number of recommendations. Can you take us through what took place? Obviously, you've got the inside track.
I must tell you, we spent more time on the international G20 and Basel issues than on the competition issues. So, but anyway,
all right,
competition seems to be the flavor of the day. Minister has put out a statement. He had a press conference this afternoon at 1 o'clock. Essentially, what's come out is that the banks have indicated that since the recommendations came out, individual banks have moved on some of those recommendations in different ways. Government had put together a task group convened by National Treasury, including DTI and the Competition Commission. Individual banks as well as the Banking Association have been interacting with that task group for the last few months. We have committed as the association to include in the review of our Code for Good Banking Practice a number of issues that respond to recommendations like transparency, disclosure, a switching code, cancellation of debit orders and so on.
Well, I don't want to waste time on this issue if you say the majority of the meeting was regarding the financial crisis and the current environment. Bottom line, on the local front, are the banks behaving?
Absolutely. They're implementing, they've committed to implement what hasn't been implemented, and there are a whole range of recommendations that Treasury, the SARB, and PASA needs to actually get together to look at the regulation of the payment system, which is a separate issue.
So let's go to the financial crisis and what emanated from discussions on that point.
Well, firstly, the Minister and his team briefed us on their discussion at the G20 at the Financial Stability Board at Basel and so on. Basel, we have been briefed by the regulator as well, and we've been interacting with the regulator. I think the point that was made was that we are part of the G20. We're not going to push back on the recommendations coming from there. We're part of the club. We need to play by the rules. But we did impress upon the minister that we need to look at national conditions when it comes to implementation.
And specifically increased liquidity
Liquidity
requirements.
is a critical issue, absolutely. And we made the point that if the liquidity recommendations are implemented as they are being recommended, we can say goodbye to the mortgage industry in this country.
It's not going to impact credit extension in the country favorably, is the bottom line.
Absolutely not. We also made the point that we are expanding into Africa. We are trying to generate a mortgage market in Africa that would be dead in its tracks. And I think the minister appreciated that. The minister also made the point that we need to meet more regularly and develop a SA Inc. position on these issues, so that when the minister and his team are representing us in this forum, they are actually going there, having talked to us, and we're singing off the same page.
Kaz, thank you very much for that update. That was the Managing Director of the Banking Association of South Africa, Kaz Cavadia. Just a quick update from Nick before we go on the markets and before we get to Eleni Jokos and an update on what is happening globally. The banks were strong today, specifically Investec leading the pile. Anything on the banking front, despite the fact that they're behaving and have been given the thumbs up from the South African Finance Minister?
No, other than that, the banking sector tends to lead that risk appetite where it happens. Certainly when the foreigners step in, they tend to pick up the banks as well. Any sort of correction or any sort of market pullback that we tend to look towards is usually led lower by the financials. The thing, certainly when the banks are so strong, it makes us believe that the appetite is back. And as I said, we're certainly buying at these low levels. Nick